We are entering into a season of thankfulness, and there is so much more to be thankful for this year. We're able to see more of our friends and co-workers in person, have family gatherings, and travel more. Real estate market is returning to normal, in parentheses I would say, that is compared to the crazy time last year. Our inventory shrunk in October as expected. We ended the month of September, if you remember, with 3,971 active listings on the market. In October, we finished with 3,376 houses on the market, a 13% decrease. The inventory decreased mainly because a smaller number of new listings came on the market in October. Record high October was in 2006 with 29,000 listings on the market, and the record low was set this year, 3,376. Last year in October we had 48 active listings, which is 1,000 more, and the market was crazier. So the market is changing. We get to keep the equity that we gained, but the price growth is rapidly decelerating. It has slowed from a year-over-year gain of 26% that we had in May to 23% in June to 17% in July, and so on to 13% in September. Let's look at the average close price. Last October it was $622,000. It peaked in June when the average sales price was $725,000, $100,000 more. Then it was decreasing each month to hit $684,000 this October. Earlier in the year, the sellers expected that their homes would sell for substantially more than the asking price. Now they have to temper their expectations. Still, on average, homes still sell at 1.5% above asking price. But the buyers can be thankful now that the extreme bidding wars are less common. This September, 18.7% of closed transactions reduced the asking price before receiving an offer. This compares to 10% in July. Those properties that had to reduce the price spent on average 35 days on the market compared to 8 days to those that with no price reductions. It's clear that pricing the properties correctly from the start results in the faster sale. Because of the rise in inflation, I do not see the demand for housing decreasing much, especially among investors. Purchasing a home is a way to curb inflation for many. In the conventional 15, 20 or 30-year loan, your monthly payment is a fixed cost protecting you from inflation, which causes rent costs to increase, by the way. Some fun real estate facts. Zillow announced it is exiting its business that buys and flips homes and is eliminating 25% of its workforce. Zillow CEO told their investors that they had determined that unpredictability in forecasting home prices far exceeds what they anticipated. Open Door, another iBuyer, purchased more than twice as many homes as Zillow in the second quarter. It is not a publicly traded company, so we don't know for sure what is happening there, but can probably assume that this factor is a losing game for them as well. One of the goals of Open Door founder was to get rid of the real estate agents once and for all. It does not look like it's going to happen. They cannot account for one very important market element in their algorithm, that is the human factor. So real estate agents are here to stay for a while. Thank you for listening, and it was brought to you by Anna Merrick with Metro Brokers Impressions Realty.